Hey guys, so welcome back to another video. I hope you're all doing well. Today we're going over something that's been really highly requested, and I totally get it. You know, when it comes to trading, you want to know how much you could be making every day, how much you should be risking, how much you need to invest in certain stocks or anything like that, or just the day trade options like we do a lot, because we do a whole lot of, investing and day trading. So it does get a little bit confusing, so we're going to talk about today how much you should be trading with. This doesn't mean you have to be trading with this amount, it's my recommendation. So, you can do whatever works for you, but just based off my experience, we're going to be talking about, what I think works and what's worked for me specifically. So, like always, I like to start every video out with a couple profit screenshots. Paramount did very well yesterday. It rocketed, I think, up 15% in a day. And so we got this screenshot and this screenshot from our members. If you want access to all our trades live, I'm going to be putting that in the description of the video, so you guys can check that out. But of course, it's not necessary because this video is, of course, for free and for everyone. So with that being said, here's a Rivian trade. Now, how much did I put in it? How much did I make? And do I think that was a reasonable amount? So basically, what I was doing was buying up Rivian for a while, for the past month, pretty much, and even, really early on in June, I had been buying Rivian shares. So, when it comes to Rivian, it's a pretty cheap stock right now. Well, especially when I was buying it, it was only about $10. And if you buy 100 shares of a stock, you can sell calls on it weekly. And by selling calls, you'll get a little bit of premium for free just from holding that stock. So I wanted to do that with Rivian, so I needed enough to buy 100 shares, and therefore I bought about, I think I had like 115 shares at about $11. So that way I could sell a call every week. Now, with that being said, Rivian rocketed one day, went up in only 10 minutes, it went 65% up, and that's because of the deal with Volkswagen. So I made about, like with all my shares combined, on just my investment account, I made $812 in 10 minutes. So that was great, and that is, that's definitely a good amount. I mean, 65% is crazy in just one day, but $812 is definitely a good amount to be making from one investment when you're only risking a little bit more than $1,000. So this isn't an average trade. This is an unusual trade where price spiked much higher than we thought it was going to go. Now, here's the thing. We did have our price target originally set for 1850, so that was fine. That worked out well, but it actually went a little bit higher. Not to complain or anything, we actually did a very good job because it came down quickly after that, but that just goes to show like how much we were targeting versus how much we made, which was pretty spot on. So Rivian is a great example, showing you that sometimes a stock might just randomly spike, and that's a time where you might need to put in, or you might want to put in more money than you were planning on originally. Another great example, this one's probably the best example I could come up with. So Petco is a stock I was buying back in, I started buying in early May, but we got our official position in about the middle of May, where we got over 100 shares of Petco. This is one I wish that I bought many more shares, because yes, we were targeting a crazy amount, over $3 from our entry at about $1.50, but we didn't expect for it to shoot up so quickly. It ended up going up about 145% in just 1 month, and so I regretted not putting more into that stock, because that's like it's at its peak a 100% gain in only 1 month, which is pretty insane. Now, this isn't always going to be the case, like I said, very unusual, so let's talk about some day trades and swing trades, because that's what we do a whole lot here in Hydra trading. So, one day trade we had was, and it does involve this screenshot, we're going to look at it because it's an alert. Let's go find it, and we can just look at regular trading hours here. So we've had some trades since then, but not a whole lot. I don't trade AMD a ton. So basically, one of our analysts alerted that he was buying AMD puts. Now, each one of these is about $100, which means if you're trading with $1,000, you can buy 10 of them. Usually we buy 10 of them. I think he bought a little bit more because he was very confident in this trade, But yeah, you need to have at least $100 to be entering just one put. So that's where it gets a little bit interesting. What if you don't want to risk $100? Well, you need at least that amount, and it's an options trade, so you could potentially, if something crazy happens, lose everything. Now, in our server, we promote tight stop losses, so you're only losing 10 to 20% on losing trades, while you can make over 100% on the winning ones. However, you do have to be aware that something crazy could just happen, and you end up losing all that money on the option. And that's a risk you have to be aware with for pretty much any trade, because like for crazy dips like during COVID, stocks fell a ton, people lost their whole life savings in just a couple days. So you have to be aware that random things like that can happen. Now, let's take a look at this trade. We bought the contracts at market open because we were confident it would push down after market open and pretty much for the rest of the day. That's what it did. This is the 5-minute chart, so you might be thinking, oh, well, I'll leave this here for a second. You might be thinking, oh, it's not that impressive, but this is the 5-minute. The 1 minute is crazy long because this is a whole what? It goes from $170 to $165. That is insane. So that's about 3% of a move, maybe even a little bit more that we caught. And so those contracts went up 172%. So every $100 turns into 172 in profit, right? So it's $272 total, which is pretty insane, and that's why sometimes it is worth risking a little more. Excuse me. So this was this trade. As you guys can see, I'll enlarge it. Basically, we put these take profits at places of consolidation. Very smart trade. But let's move on to the next one. FedEx. So for this one, FedEx is a very expensive stock, and what we were doing was buying calls and buying shares. So our analyst said, buy these FedEx calls. These are not even at the money. These were, let's see, these were still like $20 out, so very far out. And yet they made a lot of money. So we bought them at $320 per contract, and we sold them at $2,360 per contract. So a massive, massive gain there, which means that any $300 you put into that trade could turn into, and did turn into, $2,300. So you're keeping the difference of 2,000. So yeah, sometimes it definitely is worth risking a little bit more. Now, if you're trading with only $300, you're putting your whole account into that trade. So what if it goes against you? Well, in that case, you lose your entire account. So you may want to have enough money, like $1,000, where you still have $700 to trade with, even if you miss out and lose on this trade. Luckily, that wasn't the case, and we made a whole lot of money, even on the UPS ones, which were a different trade entirely. We also, speaking of shares, alerted to buy shares. So you could have bought just one share of FedEx for $255 to risk a little bit less, and then you sell it at $300 up here, and then you're keeping the difference. That would have been about $45, maybe a little bit more at the peak. So that's a less risky way of trading, and that still would have grown your account a ton. So with that being said, I'd say the base for the amount you should be trading with is about $400 to $500 and no less. If you're trading with $100, yes, you can enter one of our AMD contracts and end up with $272, and yeah, that's amazing. But if that one trade goes against you, you lose your whole account. Also, the best part about AMD and pretty much any day trade we take is that we're in with like multiple contracts. Like I said, I take 10. That way I can trim 4, 8, and then maybe the 9th contract here and exit our 10th here. That's what I usually do, which means I give us an opportunity so that if it happens to go all the way back up and stop us out at our stop loss, well then we still make money on the other contracts we took. So you should have enough. That way, even if it goes all the way back to your break even, you took profit on some contracts already. So yeah, it definitely makes sense to have multiple contracts in an options trade so that you can trim. And yes, you'll of course lose more if it goes against you, but you're going to make way, 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 way more if it goes in your favor. With that being said, if you want to take all of our trades live, if you want access to pretty much every single trade we take, including the ones we went over that the analysts alerted, we're going to put the link in the description to that Discord, and you guys can just join and ask for a free trial, or you can ask how much it costs, anything like that. We'll be happy to help you.